welcome to Tradespoon and Yellow Tunnel. My name is Lark Carpel. I'm CEO and founder of Yellow Tunnel. And today we're going to have our weekly strategy roundtable where we talk about current market conditions and answer any questions you might have. For those of you who are new, I see a lot of new names. Some of you from Bar Chart. Let me know if any of you guys are from Bar Chart. Peter, welcome back. But my background is technology. I was executive vice president, head of technology at broker-dealer like Options Express, CTO of Media Ocean. So a lot of work at hedge funds, broker-dealers, always, most of the time in fintech space. And when the company Options Express, Media Ocean actually got bought, or in the case of Options Express went public, I decided to manage my own money. So I took all the experience that I've gathered in these fintech companies here in Chicago and built my own technology team to find opportunities in the market, signals in the market using artificial intelligence, using neural networks. And I've been doing that since 2007. So that's my background. So I manage my own money using AI and the signals generated by the models. And recently, in the past year, Keith also joined us, and his background is working in hedge funds, market maker. So between two of us, we have a great team, probably over 50 years of experience, combined experience on both trading and building technology. It's a unique place. Yellow Tunnel, you're not going to see a lot of firms out there for average retail investor that combines both professional trading and building technology. So that's my background, our background on Yellow Tunnel. Disclosures are very important. I'm going to go to specific trade ideas, so please visit the link, especially for those of you who are new trading. I'm going to go through specific trade ideas. So I encourage you to go to optionstrading.com so you can understand the risk associated and suitability associated with trading stock or options. You can always pause the screen if you need more time to read the disclosures. All right, Yellow Tunnel. A lot of people ask me what's the reason for name for the Yellow Tunnel. The idea is the tunnel, right? It's the conduit between trading and psychology, right? So kind of there's a light at the end of the tunnel, and that light is trading psychology. So I'm going to talk about trading psychology as well towards the end of it presentation, but I do want to talk about first the market conditions. Where do I see opportunities in the market? So if you look at the SPX, right? If you follow my webinars every week, at this time we have a webinar, sometimes at different times, but for the most part Tuesday, sometimes Wednesday after the close, but lately it's been Tuesday, same time, next week, same time, webinar. I talked about, I know Peter was here, Alan Fisher, welcome back. I know Alan was there. I'm not sure if Larry was or was not there. Welcome. But we talked about SPX level, and actually I put down this resistance, right? There's a very big over resistance at 5,800. We were joking about I'm going to eat my keyboard if we break through the 5,800. But I did say we could break through the 5,800, and I actually mentioned, for example, if China and United States will sign an agreement where they lower taxes, tariffs, and put some kind of a pause into the tariff war. And we actually got that event, right? And most people did not anticipate that. I didn't anticipate that, actually kind of a lot of people saying that the Trump administration kind of, caved into demands of China. That's irrelevant. What's relevant is that most people did not anticipate this. We did break through the 5,800, and the rally continues into the next very important overhead resistance, which is now, we'll draw it out here, 6,000, right? We see a lot of overhead resistance at 6,000, a lot of positioning in terms of gamma data. So and we're not that far away, right? We're less than 2% away. So if you look at the gamma exposure, I also use our own model. So Spiders basically model says potentially could reach 575, right? This data was updated on May 1st, and we're already above 575 level, right? So much higher than the model anticipated because of the new information. And the data for the 3 months doesn't only gets updated on the 1st, so it'll get adjusted on June 1st again. And there are definitely trends are turning positive. short-term and medium trends are turning positive. But if you look at the SPX, you can see there was a very large positioning at 57 and 5800. But if you compare to how much gamma is at 6,000 strike, meaning that there's a lot of open contracts that expire actually in June. Most of them actually expire in June. And we also have May expiration this week. But a lot of them expired to June, basically saying that just like on the way to the downside, we had a 5,000 level, which we did not break. We breached it to 4,800, but the 5,000 level held because there was a lot of positioning at the 6,000 level. It's the same thing. Now the 6,000 level is acting as a magnet, right? Because the idea behind high open interest of option contracts at that strike price, right? And we're talking about billions of dollars, right? So $65 billion are in June expiration across all strikes, and you can see a big percentage of that is in 6,000 level. What does it mean? That the dealers more likely than not will be forced to sell their position, right? To be market neutral, to be gamma neutral and delta neutral. They would have to probably sell at 6,000 level. Not a lot of, between 5,800 and 6,000, not a lot of what we call call wall, right? Basically wall, which is market is gonna have hard time breaking. So just like I didn't think we're gonna break 5,800, I don't think we're gonna break 6,000. But again, we need a positive catalyst. Maybe it's NVIDIA earnings, right? One of the better performance stocks after the agreement has been signed between China and the United States is NVIDIA, right? And you can see NVIDIA is in strong uptrend. Some of the stocks that were talked about recently that announced earnings, right? Coinbase, right? Kind of a vertical move up. Shopify, vertical move up. Oracle. So high beta stock, AMD. High beta stocks are catching a bit because they were extremely oversold, and there is still a lot more room to catch up, right? So if you look at the 10-year yield, we're back to 4.5 April high, right? During the Liberation Day, all right, and basically almost not that far away. On the better than expected, well, because of the probability of recession has decreased significantly, right? It was 50% last week based on Goldman Sachs. Now we're back to 20% according to Goldman Sachs in terms of probability of recession. That means Fed doesn't really have to lower interest rates anytime soon, so the yield is up. I think it's stable, and stable is good, right? We've been trading as low as 390, as high as 460. As long as we're not making new highs or breaking down to the downside, this is very positive. And you can see kind of unwinding the US trading away from United States. US exceptionalism has been challenged. So you can see gold vertical move up now going through consolidation phase. You can see small caps now back on. So widening of the participation, widening of the rally. You can see significant move in small caps. Broke through the 200 support level, trying to get to the 50-day moving average. Semiconductors catching a bit above 50, above 200, above the breakdown right before the Liberation Day, right? So semiconductors on its way to all-time highs. Not all-time highs, actually, 2025 highs. We're still kind of far from all-time highs. But very strong price action in semiconductors, QQQs, right? QQQs above 500 on its way to all-time high as well. So that's where the market is based on the probability, right? One standard deviation. Trading is about distribution of probabilities, distribution of possible outcomes. On one hand, 6,000, right? So one standard deviation somewhere between 595 and 6 all-time high. I'll call it 6,000. I mean, maybe it could overshoot. Let's do this. We'll just do a little bit wider. So scenario number one, right? Too far, too fast. right? And we're going to have some negative news, maybe the earnings, not the earnings, but maybe unemployment ticks up, maybe inflation data ticks up, maybe Trump will come up in a week from now and says, listen, China is not playing along, we have to raise tariffs back on, right? Some kind of negative news, and we're trading below 5,700, one standard deviation. Scenario number two, right, distribution of possible outcomes, is that scenario number two, we're trading in this range, right? If we have some negative news, we get to 5,700, maybe 5,800. If you have positive news, we get to that 6,000, maybe slightly overshooting level. And scenario number three, we're making new all-time highs and continue going higher. And we're talking about between now and June. These are June contracts and May contracts. Right? So how many of you say scenario number one? Sorry about that. How many of you say scenario number one, we're heading lower, right? This is just a rally inside of the bear market, and 10% inflation rate, 10% tariff is still imposed across all the countries. Net, it has to be inflationary. Economy is already slowing down. Unemployment is kind of, you can see people can't find jobs, takes longer to find jobs. Housing market is stagnant, right? So signs of recession will percolate in between now and end of June. And scenario number one, we're going to 550, 540. Scenario number two, no, we're trading in the range somewhere between 550-700 or 565. People talk about 565 level, and then 6,000, 650. Right? That's scenario number two. And scenario number three, we're at all-time highs. All the, VIX is at 18. All the troubles are behind us. Trump, new administration is going to concentrate on taxes, right? There's already headline news about cutting down the taxes, SOL tax, right? Going from $10,000 exemption to $30,000 exemption on some of the blue states that affects blue states the most, and lowering the taxes, right? And deregulation, right? So that's the headline news. And we're making all-time highs, right? So how many of you say one? Type in one if you think we are getting away from American exceptionalism, right? So United States by China. So scenario number one. Scenario number two, no, we're trading in the range. We have a lot of great headline news, but underneath the hood, there is deterioration in the economic. We had negative GDP in Q1. We could have another negative print, or maybe, lower single-digit positive, GDP. So we're trading in the range two, and scenario number three, higher highs, higher lows. Tim, thank you. One. Alan, what do you think? David, Larry, Peter, Ron. Tim, thank you. How many of you say one? Mr. Simon, doctor, welcome. How many of you say one? We're heading lower, two, range, and three, we're heading higher. Tim, two, thank you. Anybody else? Ron, Peter, Mr. Simon, doctor, Larry, David, Alan, Buchanan. Okay. So two, I agree with Tim. I think it's one. No, two. Sorry, two. We're trading in the range, right? One standard deviation to the left, one standard deviation to the right between now. Earnings season is behind us. We do have NVIDIA earnings. I don't think it's going to be anything new. We're going to, we had earnings from most of the semiconductors. It's kind of a mixed bag. And market short-term is overbought, and I think it makes sense for the market to consolidate, at least for the next couple of weeks. So I'm going to trade scenario number two. What does it mean? That, at 6,000, at least until we break through the 6,000, you want to consider start trimming some of your positions at 6,000. And we're not that far away. We're already at 590 and 589, 590. SPY, SPX, 5,900. So at 6,000, I would consider selling or trimming your long position. If we revisit 5,800, 5,700, these would be buy levels, right? Both buy levels, because this was used to 5,800 was very large overhead resistance. Now it's going to become a support, and same could be said about 5,700. So short term, I think bears are going to have hard time pushing the market below 5,700. These are opportunities to buy, and this is opportunities to sell. Any questions about the market conditions and what to expect? Keep an eye on Bitcoin. Bitcoin is also stalling. It led the market to the upside. It's not breaking out to all-time highs, but it did reach, I mean, almost all-time highs, 110,000. We were at 105. So Bitcoin is already, I would say, started consolidating. It's not making new highs in the past 4 sessions, so I assume the rest of the market will follow. Crude oil bounced back. Trump is going to Middle East, sign some deals, make America great again. Nvidia's strong rally to the upside, broke through the 50 to 100-day moving average, continues to rally, up another 6%. We talked about VIX 17 handle. We talked about dollar recovering from 98 above 100 level, so that's important. Yield is stable. That's bullish. High yield is up. High yield already close to I think, decade high. No, not decades. Since 22. Since 22. We're still far away from 21 highs, but nonetheless much higher from the lows. All right, so that's another good sign, and for market to be bullish. And stocks like Arc Innovation is rebounding, has a strong rebound, up 5%. So on Yellowtown, we have different services to help you navigate market conditions and also share our trades. So we have aggressive power trader. One of my favorite models, right, is a short-term model geared toward aggressive trader, where you trade on daily basis, right, or maybe hourly basis. You look for day trading or short-term trading. I still think that there is still a high probability that market will revisit the lows. I don't think it's going to happen first half of the year. I do think it's going to happen second half of the year, right? Kind of similar to 2018. If you look at the 2018, the first Trump administration and first year they were doing the tariff war, right? 10% pullback, recovery, 10% pullback, recovery after April, right? April, May, June, all the way to August, we're making new highs, same thing, 90-day delay. And then starting August, September, Trump said, well, China is not playing along. Then they're not committing to what they promised us back in April and May. And then the market dropped 10%, and then there is a policy mistake, raising interest rates by Powell, and we're down 20%. So something similar could happen again, and I think that's something that could happen again this year, very similar. So it's very important to be aggressive short-term trader. So today we have Cisco going into the earnings, up, Delta Airline, Meta, some of the signals from today, Morgan Stanley, right, and Spider. So the model runs every day after the market close and looks at the daily data, right, end of day close prices and volume, and makes trains on the data, makes daily predictions. And that's the list from today. You also have, excuse me, long-term predictions that updated every month, right, on the first of every month. And we're giving you suggested entry price, right? And keep in mind, optimizing position entry and exit could make a huge difference whether you're a long-term successful trader or not, right? Example of Cisco, market has been volatile. So if you're buying at 61 and you're selling at 63, that's $2–3 difference, right? 4–5% difference between entry and exit. Same thing with Delta Airline. You want to make sure that you're not consistently overpaying for buys, and not getting enough for your sell orders, right? So just that tool alone is worth, pursuing using these services like NVIDIA. Right, at 116, don't consider buying at 116. At 123, consider selling. I mean, we had a huge gap today, so it's 130. And it's much higher than the model anticipated. Only in 10 days, model anticipated 131. So we're way ahead of schedule on the 10-day prediction. But at least it can give you a sense that long-term, model is way ahead of its long-term trends. Short-term, it's already also overbought. So maybe it makes sense to trim NVIDIA. So AI analysis is very important. It's part of the aggressive power trader. We also give you stock ideas, same thing, option ideas. If you want to take, have leverage, you can buy Cisco May 16 call, right, for $55 or $58. So that's would be option trade ideas. But still, the idea is to, for aggressive power trade, I'm looking for 1%, right? 1% move, target stop loss, target gain. Don't risk more than, we suggest not to risk more than 2.5% of your account value per position if you're holding position overnight. If you're doing day trading, less than 1%, and start with only 4 positions at a time. So that's aggressive power trader. Aggressive power trader, if you're looking for ideas, you're looking for signals, then you will find them. Same thing with weekly trader, a little bit longer term model. This runs only on Sundays because it makes longer term prediction. It trains on weekly data. And Deere, General Electric, NTOP, all of the signals that were there this Sunday. And you can look at the history of all the signals. Every week would show you, okay, on May 4th, model identified, ABT, Bitcoin, General Electric, some of the also bullish trade signals. So that's weekly power trade. If you want to see what I trade, dynamic power trade is a combination of stock and option trades, right? So today I'm trying to close NVIDIA, right? So NVIDIA, I've been in this position for a couple of weeks. I've been bullish for a few weeks, since April 14th. So it's almost been a month. So entered it at $6.40. It's trading at $12.20. I'm getting close to my exit price. So this is one of the bigger position, one of the longer position that I held. So this would be an example of the spread position for NVIDIA. And also trade stocks, right? So Tesla, I bought a Tesla at 313, trimmed it today at 323, it trades at 326, next exit at 348. So it's a combination of both stock and option trades. You can enter your phone number to get SMS messages. You can look at the history of all these signals. You can watch the recording, live trading room recording, right? Every day there's a recording. You can actually watch what I talked about it in the live trading room. There is AI analysis for your own stocks that you want to analyze. And same thing, you can, if I'm trading stock, but you want to trade options, then we suggest either weekly or monthly contracts in the money options. You can also trade with these buy and sell signals and trend analysis. So that's dynamic power trader. Any questions on dynamic power trader? Alan, David, Larry, Dr. Simon, Peter, welcome back. Tim, Wanda, welcome Wanda back. Excellent. Earnings power trader has been very successful, very powerful in the past few months because of the volatility. Right, I tried to do only a couple trades. JD, I actually talked about JD. I didn't do it in this week, but I did it in my personal account. We talked about it in the live trading room. Idea of calendar spreads, right, or bullish strategies that are not very capital intensive, right? You can buy calendar spreads, you can buy spreads, butterflies, right? If you long the market, if you think the market is going to continue higher, and you want to do a debit strategy, then I would do either calendar spreads or butterflies or debit spreads. And then in this example, I actually finance JD by selling the put spread. If I see that the market is overbought and it's not going anywhere, then sometimes we do iron condors. We're selling the premium. So based on the volatility, based on our proprietary model, based on my own analysis, sometimes we sell premium, sometimes we buy premium, but these are earnings power trader, right? AMAT this week, Alibaba, Cisco, JD. So Wednesday and Thursday, I'll do at least one of the trades. And in the recording, in my personal account, I do more, And you can access these recordings, or you can participate live in that closing bell session where I do a lot of the earnings strategies. So that's earnings power trade. It's mostly options trading, but I tried to structure a trade where you have a small capital requirement, but you can have these outsized returns, right? Just in the past couple of weeks, there's many, right? We talked about Amazon did great. I still have a, calendars, just the long leg. So Amazon did well. F5 is doing well. Palantir did not really work, but it has a room. It was breaking out, so Palantir could still work. I talked about AMD trade that worked really well. Coinbase worked really well on calendar spread. Shopify, I'm an Oracle trade. So a lot of these trades are because of the continuation. If you do a butterfly or a spread or a calendar spread in this example, then you're making kind of these double-digit, triple-digit returns in a short period of time. So earnings power trader, I encourage you to also try it out. It's a great service. And finally, profit accelerator. This is where I only trade stocks. Right? A lot of people don't feel comfortable trading options. They don't understand what gamma or exposure mean. They just want ideas, right? So we have Tesla, Microsoft, RCL, right? So these are all stock trades. And you can find them in the Profit Accelerator. Between Keith and I, we also have a paid program, very aggressive, single options, short-term trading, very open to very few people. It requires education, it requires capital. So that's another service that we do offer. So those are the paid services. Any questions? Any questions on any of these paid services? Alan, David, Larry, Dr. Simon, Peter, Tim, Wanda, any questions? On free services, we have Getting Started Guide. I encourage you to download Getting Started Guide, get into our mindset of how we think about trading. We have webinars and recordings. Open up a dedicated support schedule, one-on-one consultation with one of our product specialists. If you want to talk to Keith or Alan, we have a team of product specialists who can also help you. We do have a blog, video blog. This is today, usually by Wednesday, you have an update on the trend analysis. And then every Sunday, there is a weekly Power Trader blog that being issued every Sunday. So add info at yellowtunnel.com, info at yellowtunnel.com to make sure that we're actually able to deliver you the emails. A lot of webinars on trading psychology, right? You can find them under Trading Discipline Market Plan. Encourage you to look at that as well. In the live trading room, we talk about different concepts from psychology, prospect theory. A lot of time I cover prospect theory, game theory, different biases, self-serving biases, hindsight biases. We cover different books that can help you improve your trading, and trading psychology is important. I always concentrate on the economy of control, right? Concentrating on things that are within your control. You don't really know, when the tariffs will escalate or de-escalate. So it's important to concentrate on things that you have control over. Cash, position size are probably the most important tools. One way to avoid trading on emotions is this, position size. So going through not only positive case scenario, positive visualization, but negative visualization. We practice that in live trading room on a daily basis. And it's all about compounding investment. Just remember, even aggressive power trading, even if you look for 1 or 2% gain, it compounds. If you can do this multiple times a week, if you can make 1% a week, that compounds and you make 12%, 4% a month, 48% a year, right? So compounding investment is a very powerful approach. A lot of people are looking for 100% return, 200% return. Yeah, maybe penny stocks, some of the option trades, right? I do earnings power trading. You can make triple-digit returns overnight, but you just have to remember they're less than 50% of the time, right? So it just depends on your style and the idea of internalizing these concepts. These are some of the concepts from live trading room. Wait for 2 to 3 days to confirm the trend change. Again, position size is the most important. And some of the concepts that I talk a lot that I encourage you to kind of review is, again, this concept of prospect theory, right? The risk aversion. Behavioral economics, he got Nobel Prize, right? Daniel Kahneman got a Nobel Prize for this. And the idea that our relationship with money is different, right? And $100 gain and $100 loss will feel different to Vlad, you know, Peter, Tim, Wanda, right? And, you know, and for every $100 loss, you need, you know, $500 wins to feel the same way, right? So prospect theory talks about that. Talks about utility functions, risk aversion. So very important concept. He has a great book about thinking fast, thinking slow. Very applicable for trading and decision-making process. So again, encourage you to review it. It's a great book, kind of emotional intelligence. He's one of the founders, or you know, at least of recent advances in emotional intelligence. Long call leap diagnose, 2-year poor man cover call. So what is your best service? Yellow tunnel, trade spoon. Wanda, if you're doing leaps, longer term trades, I mean, I would go with dynamic power trader. Dynamic power trader, these are long-term trades in the uptrend. So obviously you can do NVIDIA diagonals, right? The leaps, right? You can buy January NVIDIA call and start selling calls, you know, front months, diagonals, right? So I would go with the dynamic power trader on yellow tunnel. Let me know if that makes sense. Thank you, Wanda. But you would have to, I usually don't do leaps. You would have to substitute, right? If I do NVIDIA, right? I mean, both trades would have been very profitable, right? Back in, you know, if you did this NVIDIA trade, right? Whether you structured as a leap diagonal, right? Was the leap and front months, June options, both trades would be successful. Spread is probably more successful than diagonal, but both trades would be very successful. Any other questions? Okay, if there are no other questions, then thank you guys are awesome. A lot of participation. You guys are joining. So, you know, I would keep an eye on, I mean, first of all, on Bitcoin. If Bitcoin doesn't break through the all-time high, I think market is going to have a hard time breaking. And, you know, it looks like we're going to go through some consolidation process short term. But I think, again, pullbacks are going to be short-lived and buyers will step in, right? Personally, I think 5,800 is a good entry point. Now, I probably wouldn't chase the market because I think it's going to take some time to break through the 6,000. Something positive like signing agreement between China and United States have to happen for the market to break the 6,000. Maybe it's NVIDIA earnings, maybe it's a peace agreement between Russia and, you know, Ukraine, maybe it's a ceasefire in the Middle East and Gaza. I don't know what it is, but, you know, something positive has to happen in the market beyond what people expect, right? This week was a great example where you have a data point that nobody expected. That's when you have these rallies or sell-offs. So that's kind of, you need that catalyst to get you above 6,000. So I would consider, you know, trimming at 6,000 and, you know, buying to pullbacks. 5,800 sounds like a good entry point. 5,700 just as good, or even better, I guess. All right, that's all I have for today. Thank you very much for participation. I really appreciate your time. Next Tuesday, same time, 12 Central, 1 p.m. Eastern, 10 a.m. LA time, 11 a.m. Mountain time. I will be here. We're going to talk about whether we're at 6,000 level or at 5,800. We'll see by next Tuesday. But thank you very much and have a great day.